Hello everyone, welcome to the Ichimoku.co daily US stock market review for the trading day ending April 8th. Just a quick look here at what we're looking at, and the NASDAQ was up 33 points today, up 0.87%, closing at 35.38, and the S&P 500 was up almost 7 points, up 0.38%, closing at 1851. Over the recent period, we've seen the NASDAQ quite weak, and it has been the strongest index throughout the day today. And here, just looking at the NASDAQ 100, and 3 trading periods ago, we saw the very solid sell-off and the bearish breakout down below the Ichimoku cloud, giving us a bearish market in all 3 timeframes. For the previous day's trading, we saw the market finding support around the 3500 level on an indecisive spinning top type candle, and here today we see this white body candle where the buyers have taken back control. Now the problem here for the buyers are that they weren't strong enough to take out the previous high and therefore didn't establish a new first time frame uptrend. And that 3543 level has held as resistance for the second consecutive trading day. Now even if we do see some follow through from the buyers tomorrow, it's most likely that we will see some solid resistance around the bottom of the cloud at 3570. So this rally here may be very short-lived. And looking at this sell-off where we had the breakout previously and the angle of the Tenkan-sen and Kijun-sen here, it does suggest that there was very solid momentum. And very often when we see that solid downside momentum, we see the market rally to the Tenkan-sen, and that's the first area where we find resistance, and we see the sellers come back into the market. So a possibility of this rally petering out. Now just looking here at the Fibonacci extension, and we're examining the relationship of this first time frame downtrend to the previous time the market's trending down, and here we've seen the market interacting with the 100% level for the previous day's trading on an indecisive candle. It set the market up perfectly for a change of trend, but the buyers, as I've mentioned, haven't been strong enough to change that trend. Now there still is a possibility of the trend changing tomorrow, and this is a significant event interacting with the 100% in an indecisive manner, so we will still be looking for some follow through and perhaps a test up to the bottom of the cloud. Now if the sellers do come into the market, then the next target is down here at the 161.8% at 33.94, so that's below that 3400 level. Moving to the S&P, and here we've seen the trend continue to the downside, but on another small bodied candle, a spinning top type candle. But this candle is a little bit different. We have a longer shadow on the bottom here, but we still have the buyers taking control of the market away from the sellers, where we had 2 very strong downside days, very solid momentum. But as you're aware, I often mention this highlighted zone of support below where the market's been trading recently, and that has been a very significant level in the recent past, testing now for the 4th occasion over the last month or so. So we've seen the buyers come back into this market and a possibility of a change of trend to the upside. Now this is also a potential bullish harami pattern, so we will be looking for confirmation of that, with the market making a higher high and a higher low. Now the problem here, however, for the buyers are that we have breached this 1850 level of resistance, but we do have some strong resistance at the 1858 level, and then very strong resistance at 1867, because we have both the Kijun-sen and the Tenkan-sen around that area. Looking over to the Chikou span here, that's within the corresponding price action, so it's suggesting that we have a very indecisive market at the moment. So the market seems to be perhaps transitioning from a bullish market where we had the Chikou span above the corresponding price action and now within the price action. So potential for this market to trade lower, but as we know, we have the Ichimoku cloud extending down almost to the 1800 levels, giving us a very, very solid base of support for a very large area below where the market's trading at the moment. So quite a bit of indecision in this market in big picture terms, and in very dynamic ranges to the upside and to the downside where we could find support. So a market that's really trying to make its mind up. Now in terms of the Fibonacci extension, and here we have seen the market break out down below the 100% level in a bearish way, but the buyers coming in at the moment. There still is a possibility of the market trading down to the 161.8% level, and that area now coincides with the top of the cloud. So if the sellers do come back into the market, we should see very, very strong support around this 1830 level. But in terms of the Fibonacci retracement, and here we have a slightly different story here. Now for the second consecutive day, we've seen the market rejected from the 100% level. For the previous day's trading, it was minor rejection. For today, it's much more solid rejection with the buyers taking control. So that does suggest that there is a real possibility of this trend changing. So we are looking for a potential higher high and a higher low. Now, in terms of the sectors that were of interest, we have the consumer discretionary sector, which was up 1%. The technology sector was up 1.25%. Healthcare was the weakest sector, down 0.17%. And the utilities were positive by 1.19%. And just taking a quick look at the technology sector here, and here for today's trading, we've seen price action close back within the cloud. So for quite a long period of time, we've seen the market trading above the Ichimoku cloud, and then for the last two trading days, trading within the cloud, and then a breakout down below the cloud. Now that wasn't a bearish breakout, and there was some doubt about whether we would see some follow through. So we were looking for a lower high and a lower low. But today, a white body candle with the market closing back within the cloud. So a neutral market in big picture terms, and there is a possibility of the buyers coming back into this market. If the buyers do return, however, there is potential very strong resistance at the top of the cloud up at around the 2600 level, around 2613. But looking here at the relative strength to the S&P, and we've seen for this period of time from early March, we've seen the market underperforming the technology market or sector, underperforming the overall S&P 500 index. And if we look at where the relative strength is, the distance away from the moving average, it is a fair way away, so looking a little bit overextended at the moment. We have seen a cyclical low in volatility here, and we have seen volatility picking up, and it still does continue in such a manner. So if we see the sellers come back into this market again, then and the breakout down below that Ichimoku cloud, we could see the market trading lower. So the low here at 25.28 becomes very, very important for this market. And what we want to see here is follow through from the buyers to confirm that they are not just taking control for this one candle, but they are taking control in a longer term time frame. But bearing in mind that that may be short-lived anyway because of the potential resistance at the top of the cloud. In terms of the utility sector, a very different market, and here we see a bullish market in all three timeframes, trading above the cloud, above the Kijun-sen and the Tenkan-sen, so a very strong market. The buyers have come into this market very strongly today. This is a defensive sector, so perhaps with the troubles in the overall indices, we are seeing something of a reallocation once again towards this defensive sector. In terms of relative strength, and we've seen the utility sector for the last couple of weeks outperforming the overall market, but just looking at volatility, we do seem to have seen something of a cyclical high, and there is a possibility of this market not following through with this very solid bullishness that we've seen for today's trading. So we should be watching this high here around this 305 level for the market to break out and for the market to confirm this bullishness that we're seeing. At the moment, we may see some congestion or even a pullback. If we do see a pullback, we should be looking to the Tenkan-sen around this 300 level for potential support. But looking at the Chikkah's band, that's well above the corresponding price action, suggesting very strong upside momentum, but it is a fair way away from the price action, so suggesting that the market may be looking a little overextended at the moment. And to the healthcare sector, and here we have a very important trading at the moment, a very important juncture for this market. A second time frame downtrend making a series of lower peaks and lower troughs. The market initially trading to the top of the cloud, rallying off there, finding support there, and then finding resistance at the Kijun-sen breaking out to the downside in a very solid bearish manner, and for the last two trading periods finding support at the bottom of the cloud on a very small black body candle. So the downside momentum for the sellers has certainly dried up. So even though this was the weakest sector, the sellers weren't very strong, and they haven't been strong for the past two trading periods. For today's trading, we've seen the buyers take control, even though we've seen the sellers slightly keener by closing the market down. In terms of relative strength, this market is still underperforming the overall index, the S&P 500, and that volatility is still ticking up. So what we want to see is that volatility come off and the market either retrace back in the other direction or for the market to go sideways. But at the moment it seems that the selling that we've seen is beginning to diminish, and there is a possibility of a change of trend and the buyers to come back into this market. But it really all does depend on how the market reacts to this area around the bottom of the cloud, and if we see a bearish breakout down below there and some follow through, we could see this market, the healthcare sector, trading to lower levels. Now, in terms of some interesting stocks, and at the moment Amazon has been quite interesting. It's up $9.31, trading to 327.07. But looking at the chart, this is the daily chart for Amazon, and we have a bearish market in all three time frames. So even though we've seen the buyers come into this market, then we are expecting to find some resistance around the Tenkan-sen, the green line here, which is trading at around the 330 level. Looking at the relative strength, and Amazon has been underperforming the market quite seriously for the past couple of weeks, and that coincided with the market being rejected from the cloud and selling off very strongly. Looking at volatility, we are still in an uptrend in volatility, so this change of trend in the first time frame may be short-lived. And if we don't see any follow through in the market trade up to the Tenkan-sen at 330, then we could see the sellers coming in, so we will be watching for a potential lower high and lower low. Now the buyers have taken control today, so the short-term dynamics are certainly favouring the buyers with today's trading. But when we have such solid downside momentum, it's quite rare for the market to rally significantly through the Tenkan-sen, and if the Tenkan-sen doesn't hold, then there is a very good likelihood of the Kijun-sen, which is trading just below 350, to hold as resistance if the market does rally up to that area. Next of interest was Google. Google was up $16.75, trading up to about the 555 level. And Google was looking quite similarly. This market was set up for a change of trend in that first term time frame, with the bearish breakout down below the Ichimoku cloud, finding resistance at the confluence of all of the Ichimoku indicators 4 trading periods ago. A spinning top type candle set the market up for a change of trend. The buyers have taken control. Very important trading now here at the Tenkan-sen. If the market does rally through there, then we have the Kijun-sen and Tenkan-sen trading around the 570 level, and that may offer itself as very, very solid resistance for this market. In terms of volatility, we had that cyclical low a few weeks ago, and that volatility is still ticking up. And in terms of relative strength, we have been underperforming the market for quite some time, since early March, and it looks as though the underperformance is weakening, so the relative strength is moving back towards the relative strength moving average, and suggesting that we could see this rally continue to the upside. But I suggest that if the rally does continue through the Tenkan-sen, then the area around the bottom of the cloud, around that 570 area, may hold as very strong resistance. Next to LinkedIn, which is trading at 169 and has been up $9.45 today. LinkedIn is looking quite similar here, and buyers coming back into the market following this very significant downtrend, bearish in all 3 time frames. Underperforming the market here, we've seen volatility is coming off a cyclical low, and that's why we have had this substantial downtrend. We are cyclically at a very high point in terms of volatility, so it wouldn't surprise to see a retracement back towards the Tenkan-sen or the Kijun-sen. But the Tenkan-sen at 176 and the Kijun-sen at 185 are the areas where we should see some resistance come in and some more selling if the market can rally up to that area. And next to Netflix, which is trading at $3.49 and was up $10.89 today. And Netflix is looking very similar. So we can see a similar pattern here in all of these charts. There was the indecisive candle following the very strong downtrend, and that's something that's very important to remember, that after we have these very dynamic downtrends, we have the trend trading down very strongly in the short-term and medium-term time frames, and we know that by the angle of the Tenkan-sen indicator here, that if we see these indecisive candles, the doji candles, the spinning top type candles, and candles where the sellers have lost control, it does set the market up for the change of trend. So here we've seen that occur with the buyers taking control. If we look at the underperformance here for this long period of time since March, very solid underperformance, very substantial underperformance, but we have now seen the relative strength move back to within the Bollinger Bands on the relative strength, and it does suggest that we are either going to see a rally or some congestion here, and we certainly do look to be at or very close to a cyclical high in volatility. So volatility coming off, it means that we certainly won't see, or there's a very good chance that we won't see this downtrend continue. Now, Intel has been a very interesting stock in the recent past, and here we saw the bullish breakout above the Ichimoku cloud, giving us a buy signal on the 20th of March. The market rallying, but not in any decent follow-through, with a bearish candle, a sell-off down to the Kijun-sen and Tenkan-sen within the cloud on a spinning top indecisive candle, and then we saw the market break out once again, and then we saw some follow-through in the market closing up above this 25.75 level of resistance, and then the follow-through with the market trading above all of the Ichimoku indicators. Very bullish activity here today. The market was up, or Intel was up 1.59%. The Chica span is well above the corresponding price action, looking a little bit overextended, and if we look at the relative strength, very strongly outperforming the overall index, and certainly on that basis, with the bands on the relative strength being so wide, looking as though there may not be much more left in this market. The volatility here is still ticking up and is above the bands here, and could continue more. We have a historical level up above here, so we will be watching that. But we have some important resistance here at this candle here at $27. So this $27 is going to be very important for Intel, and there's a very good likelihood that we could see some selling coming in around that level. Now, if we do see that and we see the market come off, I suggest that the area at the Tenkan-sen, which is at 26.14, should hold as solid support, and that's what we tend to see in these very dynamic trending markets, where that's the first level that we see the buyers come in, and the buyers come in fairly strongly. Now, just moving back to the healthcare sector and having a look at the stock in that sector called Pfizer. PFE is the code, and we've had a bearish breakout down below the Ichimoku cloud. So where we previously saw the stock finding support at the bottom of the cloud around $30.86 and bouncing off there, we've now seen the market find support there yesterday, but a bearish breakout, suggesting that we could see some follow through. Now, with the sellers taking control of this market, the low here becomes important, and confirmation of this breakout would be the market making a lower high and a lower low, and we could see some decent trading to the downside. There is some minor support around this $30.58 level, and then some support roughly around the $30 level. So if we do see the sellers come in, we could see support around $30. Looking on a relative strength basis, we are underperforming the market. And if we look at the recent past, however, when we have seen the market sell off, we haven't seen any substantial underperformance following through after we see these black body candles. So we're looking for confirmation of that. But the thing here is that, and very important, is that volatility is very close to a cyclical low and is starting to tick up. And if we see another bearish candle, I suggest that we could then see that trend continue to the downside with volatility volatility moving up in a cyclical manner, and we could even end up trading down through that $30.50 level, and perhaps down to the $30 level, or even down to around the 29.66 area.